Introduction. This module provides an in-depth examination of how cash and accrual accounting principles are integrated into business systems and processes, focusing on technology adoption, internal controls, operational challenges, financial reporting accuracy, and strategic financial management. Mastering these areas is critical for accountants, financial managers, and business owners aiming for robust financial oversight and regulatory compliance in a complex business environment. Accounting systems and software, supporting both cash and accrual methods. Overview of accounting software capabilities. Modern accounting software platforms such as QuickBooks, Xero, Sage, FreshBooks, and Zoho Books have revolutionized how businesses maintain financial records. These systems provide configurable settings, allowing businesses to operate using either the cash or accrual method and even toggle between the two for reporting purposes. Cash method features. Records income when cash is received and expenses when paid. Useful for straightforward tracking of cash flow and bank reconciliation. Generates cash basis financial reports, often preferred by small businesses and sole proprietors. Accrual method. Features. Automatically records revenues and expenses when earned or incurred, regardless of cash movement. Supports complex accounting functions like accounts receivable, cash payable, inventory management, and deferred revenue recognition. Facilitates compliance with GAAP and IFRS reporting standards.
Benefits of software integration. Real-time financial data updates supporting timely decision-making. Automated transaction recording minimizes human error. Integration with bank feeds, payroll, and tax filing systems streamlines operations. Scalability accommodates business growth and complexity. Internal controls for accurate financial reporting. Internal controls are policies and procedures designed to safeguard assets, ensure accuracy of financial data, and promote operational efficiency. Their design varies according to the accounting method implemented. Xero, 2.1 control environment and segregation of duties, dividing responsibilities to reduce risk of fraud or error, for example, separating invoice creation, payment approval, and bank reconciliation functions. Authorization controls, ensuring all transactions are properly authorized before recording. Access controls, restricting software access based on roles to protect sensitive data. Xero, 2.2 controls specific to cash accounting, monitoring cash inflows and outflows regularly to prevent misappropriation. Daily reconciliation of bank deposits and disbursements. Strict documentation for all cash receipts and payments. Controls specific to accrual accounting. Accurate tracking and periodic review of accounts receivable and payable aging reports. Regular physical inventory counts and reconciliation with accounting records. Ensuring timely recognition and reversal of accrued expenses and revenues through adjusting entries. Automating adjusting entries and period-end closing. Adjusting entries under accrual accounting. To comply with the matching principle, businesses using accrual accounting must make adjusting entries at period-end for accrued revenues, revenues earned but not yet billed or received. Accrued expenses, expenses incurred but not yet paid or recorded. Deferred revenues, cash received before revenue is earned, requiring deferral. Prepaid expenses, payments made in advance to be expensed over time, depreciation and amortization, systematic allocation of asset costs over useful lives. Accounting software can be configured to automate many of these recurring entries, reducing manual workload and errors. Automating closing processes. Automated workflows for reviewing trial balances, reconciling accounts, and generating financial statements. Customizable checklists ensure compliance with accounting policies and regulatory requirements. Audit trail features track changes in user actions for transparency. Reporting, compliance, and strategic implications. Generating financial statements. Software platforms can generate multiple versions of financial statements from the same dataset, such as cash basis and accrual basis income statements and balance sheets. Ensures compliance with local tax regulations and accounting standards. Facilitates management reporting tailored to internal decision-making needs. Tax compliance and regulatory reporting. Accurate tax calculation depends on proper revenue and expense recognition. Businesses must file returns based on the accounting method approved by tax authorities. Switching methods require formal application, adjustment of prior periods, and clear disclosure. Strategic financial management. Accrual accounting enables better forecasting, matching revenues and expenses to their economic occurrence. Cash accounting offers straightforward insight into liquidity but may mask underlying financial issues.
Financial metrics derived under accrual accounting, e.g., EBITDA, working capital, are often critical for securing financing and investor confidence. Businesses often maintain dual systems internally to track cash flow while complying with accrual reporting. Challenges and solutions in implementing accounting methods. Common challenges. Complexity and cost of implementing accrual accounting for small businesses. Staff training requirements to ensure correct use of accounting software and understanding of accounting principles. Data migration and reconciliation during method changes. Managing timing differences between financial and tax reporting. Practical solutions. Gradual implementation with phased training and support. Hiring or consulting with professional accountants during transitions. Utilizing cloud-based platforms with vendor support and regular updates. Establishing comprehensive internal policies and review procedures.
Case studies. Case study is a small service business using cash accounting. Overview of how simplicity and direct cash tracking benefit operational management. Discussion of limitations related to tax planning and external reporting. Case study dalawa, growing retail business transitioning to accrual accounting. Challenges faced during transition, including system upgrades and staff training. Benefits realized in inventory management, financial reporting, and investor relations. Case study tatlo, multi-entity corporation using hybrid reporting. Use of accrual accounting for consolidated reporting with cash-based management reporting for subsidiaries. Importance of strong internal controls and automation. Best practices summary. Choose the accounting method aligned with business size, complexity, and regulatory requirements. Implement accounting software that supports both cash and accrual methods with robust internal controls.